morning, everyone, and welcome to the European Crossover webinar. Okay, some news from Novak. Bear with me. I don't know why the volume on that is so loud. We are seeing Euro all of a sudden start to wake up. It was, I think I figured a way to turn this volume down a bit. There we go. But we'll go and take a look at some equities. We've actually seen a bounce back up here in equities, so we'll take a look there. We are seeing the cable punch up higher. Look at the euro; it's really starting to take off. They're preparing up. I forgot it was the ECB report. Something I wasn't paying too much attention. I was just trying to go through the different headlines. About an hour ago, German IFO data came out, or just some general commentary from them. Bear with me. But we have seen equities jump up, so we're going to go into that. We've made this run up here, right here, this 2880, or actually just a little bit above it. When I was watching this in Asia, it was they're trading in the 2850s. We talked about this kind of run out of gas yesterday, which was around the 28 mid 70-ish area, maybe just a little bit higher. And then it did jump up to, I think it was 2880 before it rotated lower. And then, as I said, coming into an Asian trading, we were trading in the 2850s. And actually, see here, we even dropped a little bit lower, all the way down 2850 itself, not just in the 50s. Before we've seen this thing just kind of turn around and springboard up. Seen the same thing in NASDAQ. And then yesterday, we were watching the Russell very closely. Try to come right back up into this 1284 area. We're seeing just the SPOOs just kind of pare back just a little bit off that. It doesn't surprise me. I mean, that these markets will stay a bit bid until we get past reporting from Amazon, Apple, Microsoft, Google, whether you want to call it Alphabet or not. So I'm thinking that we can stay bid, and then once we get past that, which you've actually got, I think another day or so, or a couple of days before that, and then we could start to potentially rotate a little bit lower, but we shall see. We'll go and take a look at the crude oil. Oh, here's the Russell here. Come back nicely here in the Russell. Although once again, you can see we're just up at that 1284. 1294 is a big, pretty good level here on the 2 hour. I think they got up as high as 1289 before they rotated lower yesterday. Or began to rotate lower and then went lower in Asia. Looking at crude oil, we can see that's just been another steady fall. Pretty good fall too. Look at that. There's July at 17. And August at 21. Bear with me. Bear with me a moment. So let's go in. Oh wow, we see the spoons come up just a little bit. Going in, moving there quickly. Kind of starting the market off, the day off a little bit slow here. Yeah, we have rotated just a little bit. I mean, you can remember, as I mentioned here, we just came up to this 1284. That's essentially all we've done. Wow, we're coming off decent, not a whole lot, but I mean, rotating. I thought about taking a little short 2880, but I'll just leave it alone. Considering we're popping up, and it just seemed like it's popping up out of nowhere. That's why I'm scrolling through the headlines to see, is there something that's pushing it? Certainly didn't want to just jump right out in front of something. But anyway, like I said, I'll just let it stay here. Once again, I wouldn't mind being a little bit more aggressive if it wasn't that we're getting earnings reports from, as I mentioned, Amazon and Apple and Google and Microsoft. But a nice quick little rotation lower, not too bad here. Well, I'll tell you what, one thing or the other was going to be either we're going to have the potential to springboard higher from this area here. If that's what I'm saying, when it popped up, looks like this thing we want to just try and grab some legs. That's why I was just ran into the news to see what's prompting this. But once again, like I said, if it wasn't for that plane, I would just go with the levels and say that's a good level, take it on, see what happens. But as I mentioned, Russell up here just revisiting this 1284 here. Remember, we had that 1294 is very key here. So just take a little bit of a break here. Not bad, actually, come off 8 handles from there in rather quick fashion. We're going to move into the, let's also pull out the calendar. So we did get French consumer credit, and really nothing. I mean, nothing until we get into the U.S. wholesale inventories and retail inventories at 8:30 Eastern. I'm on Central Standard Time, so you're going to see the 7:30. And then we do have Case-Shiller at 9 a.m. Eastern. Consumer confidence at 10 a.m. Richmond Fed, which is a very lower tier, but we do get Dallas services. Remember, yesterday we had Dallas manufacturing. We mentioned that yesterday. But a nice little rotation lower from these highs. I've been, since yesterday, trading a little bit cautious or conservative, not knowing to what extent, considering how high we're pushing up, what effect we're going to get from these other stocks. Again, they're coming into ones that can be impacted in a positive way from the whole coronavirus, which is going to be Amazon, and definitely didn't want to stay in the way if we saw one more peak. But my thoughts were, once again, let's take a look at the weekly. You can see here we have definitely this is a hanging man, and this one the wick's a little bit longer, but basically almost two weekly hammers, and then a more pronounced hammer in the NASDAQ. Look at that. So as I mentioned yesterday when I did that interview with Anthony Grudelli, my thought is that we could push just a little bit higher, and then we can start to rotate lower. And we've done that. I mean, we've pushed higher, but like I said, I don't want to be a freaking sacrificial lamb ahead of that. So I'm trading it a little bit cautious, not sure how it acts. If we made, although I think we've run over a lot of people that were short, hence why I think that they could push maybe just a bit higher, which we've done, and then rotate lower. Certainly, I didn't want them to go on and jump. You can see here in the NAS, it could jump all the way up to 89.66, and I step in the way, and then we just jump on up. Let's say in the SPOOs above 29 even. So I surely wish it was hurry up in the end of the month, hurry up and get here, so I could be a little bit more aggressive. Certainly would have liked to have taken on that trade had it not been for, like I said, this reporting that's coming out, and certainly think that, especially with Amazon, could potentially be positive news. Anyway, let's go on and move into the news. Bear with me. So the dollar, and even the news is pretty light. I mean, it's light. The dollar steadies as markets wait for Fed. I don't think the Fed's going to be any news. So once again, I guess they got to make up news. But anyway, the dollar steadied on Tuesday as currency markets entered a holding pattern ahead of the U.S. Federal Reserve and European Central Bank meetings later this week, and as a fresh tumble in oil prices cautioned against risk trading. Well, we've seen that, which is another thing also. As I saw crude oil continue to move lower in Asia, I was thinking, well, I guess it's now finally starting to have an impact. And we saw the impact when it was May crude, but I'm saying is, and we did see some impact with the June. I mean, it was piggybacking off the May, we saw a pretty good rally, remember, back in June, which took us all the way up to $18. Now we're at $10.29. But I said, okay, now maybe that's what's really going to pull the indices down. And generally we'll have that, but the indices haven't been paying too much attention to crude. But anyway, that being said, the greenback was flat against most majors, apart from a New Zealand dollar weighed down by expectations of further monetary easing, 5% drop in benchmark crude, and a 13% drop in U.S. crude. An ill omen for global demand also put the brakes on Australian dollar that has recovered 17% from a 17-year low. Markets are looking for any sort of forward guidance from the Fed, which means later on Tuesday, and is due to issue a statement on Wednesday, and for possible further easing in Europe. The ECB meets on Thursday. The Fed has so many new programs in play, it's doubtful that they follow with anything new, said Stephen Innes. The ECB could do something, though it's not clear what, he said. Hence the reason FX markets are stuck in neutral today. Today, they've been stuck in neutral for a while. The dollar held steady against a basket of currencies, about where it had been parked for a month, and it was a fraction softer against the yen at 7.17 per dollar, and a tad firmer against the euro and pound. The Fed has led the global monetary response to the COVID pandemic by dropping interest rates to zero and aggressively buying bonds and corporate credit, a program extended overnight to include municipal debt of smaller U.S. cities. The ECB has had less room to maneuver on rates and announced an enormous bond buying program, but bickering and indecision over a Eurozone rescue package has some in the market expecting deeper action still, perhaps as soon as Thursday. That has seen the euro left behind as optimism about an economic recovery from the coronavirus has put pressure on the US dollar and driven an impressive rally in riskier currencies such as Australian dollar. Whereas the US, UK, Australian, China, and Japan, if, if needs be, can go to the printing presses in Europe. They're constrained, said Colin Hard, head of strategy at BNP Paribas. I think there'll be a little bit of a risk premium that's creeping into the euro on concerns about where do we go from here? The single currency held at 821. Elsewhere, the pound was pegged lower at 24.12. Australian dollar eased slightly to 64.50. And then just an overall cap with the gold market. And really, like I said, there's a dearth of news, so had no choice. There wasn't even any mention of Aussie or whatever in the news feed. I couldn't believe it. I haven't seen that in a long time. But anyway, can gold love a coronavirus crisis? Gold loves a crisis, the old adage goes, and with prices 13% up this year to their highest since 2012, many predicting for the gains as investors search for safe places to put their money. It looks true for the coronavirus so far, but as individuals and countries alike seeing a drop in income, traditional gold consumers in India and China are buying less, and central banks are cutting purchases. Without them, goals run higher can be hard to sustain. Driven by investors' clamor for insurance against economic turmoil and the potential devaluation of assets and currencies, some predict a run reminiscent of a gold's price rally to the shy of $2,000. Bank of America Merrill Lynch even said it could touch 3,000 by the end of the year. But if history is any guide, it takes a sustainable period of rising demand to really drive gold higher. Given the depth of the economic recession economists expect because of the coronavirus, you encounter a lot of conventional wisdom around gold, like that inflation drives it up or a bad environment does, says Andrew Sheets. But gold is not so straightforward. Look at 2003 to 12. Gold basically went up in every possible scenario: boom, bust, crisis, no crisis. Then for a few years, it just went down every year. In the last half century, gold has had two spectacular bull runs. The first was triggered with governments giving up control of gold and the relaxed prohibitions on private ownership around 1970. That released a surge of pent-up demand, said Fergal O'Connor, lecturer at Cork University. The rally peaked in 2 decades of weakness, followed as central banks and thousands of tons of gold saw gold go down to around 250. And the idle turned as the structure of the market changed. European central banks agreed to coordinate sales, stabilizing prices. China allowed more people to own gold, and purchases soared. Between 2003 and 11, gold annual demand from around 2,600 tons to 4,700 tons. The rally ended as high prices punctured the demand. The 2008 financial crisis arrived in the middle of gold's last big rally. Earlier into that, prices fell sharply as a broader plunge across assets forced investors to raise money by selling what they could. In 2006 and 20 are alike. Investors moved back to gold in response to central banks' massive monetary stimulus and reduced bond yields. Financial pressure is back on an extraordinary scale, said Bank of America. Some investors say asset buying by central banks tantamount to printing money and dilutes the value of the dollar. And during after the 2008 demand rose, not only from investors, but also from central banks. The crisis of putting millions out of work and strengthening the dollar means gold prices are already at record highs in currencies, including the yuan and rupees. Disposable income is falling, gold prices are rising. They may sell in Thailand. These people are queued around the block to redeem gold for much needed cash. And then to drive prices higher, investors will have to compensate for demand loss elsewhere. So the demand for hedge of outright ownership and asset managers, which runs a gold-backed ETF, there are enough people that are scared. Most analysts still doubt gold will skyrocket. So hence, that's the end of that. So let's just go and move on to the analysis. So let's go and get that started. I was just saying good morning to Aki, and he was asking about the euro. Said we're going to get a moment. I thought he was asking about the euro. He was asking about the euro odd. We do cover the euro odd. It would just be a little bit later in our review. Let me go and pull up the bias chart, and we'll get started. So the euro challenged the bias chart resistance, meaning yesterday, of 870. The actual high was 864, closing at 832. Resistance is going to remain at 870 with the next level at 932. If you saw the Asia analysis from the weekend, I was looking for the resistance would be 870, then the next level will be 932. So it's still going to be here. We're trading in a very, very tight range. You know, we covered the news. They feel like, which really you're seeing this, you'll see in our analysis across the board. The majors are just stuck in neutral. The news story, we covered it. Also, we do have the ECB, and the thought is potentially we could see a weaker euro on that. I'm just looking at the levels here. We're just very, very quiet. I mean, if you look in here last week, we were trading here, trading quiet. We saw that dip at the end of the week, and all we've done is turn around and almost basically bounce back to where we were in that tight range. And I'm not really seeing anything change. I don't see where the Fed, which will, they'll have their statement tomorrow, what they're going to do. I mean, I'm sure they're not going to just not say anything, but I mean, just not say nothing, but I don't see what real impact that's going to have. And I think the driver to me is going to be equities. And until we get past equities, and I'm talking about the reporting coming out of Amazon, Microsoft, Apple, Google, you want to call Alphabet. Until we get past those, that's where I think that we'll see the real change. And if we see equities potentially rotate lower, then we could see a drive back in the dollar. The difference is going to be if the ECB does something, and they may. I'm just not sure, but in the meantime, I'm just looking at the levels. So 870 is going to remain the resistance. The difference is that the support's going to come up to 770. Well, the support's going to remain the same, yeah, because we're setting to tight range. So that's even going to remain the same, 776. So with that, we're going to move into the cable. So the cable pushed higher on Monday, resistance for Tuesday, and the trigger remains 25.48. But we're above 25.48. Doggone it. I meant to put 24.48. Doggone it. Because you can see that. That's yesterday's resistance. So I'm going to put 24. There we go. Doggone it. Okay, so cable pushed higher on Monday, resistance for Tuesday, and the trigger remains 24.48. And the high right now is what, about 24.80-ish. A daily close above 25.02 will signal a bottom in place, opening a challenge to 26.02. Support will be 23.45. So we are, let's pull this up. Well, we're at 24.72. And we talked about 24.48 being the trigger. And we're seeing that trigger, but the real resistance is going to come in right there at 25.02. If we can get a daily close above 25.02, that will signal a bottom in place. So obviously, since we're above the trigger and the analysis was done in Asia, it's going to be 25.02. that is going to be the key resistance. And that's on a close. I mean, if we can get above 2502 on a close, then that'll open the door for us to move potentially to 26. But once again, like I said, we've got to get there. We're 2472 now. We did get above that trigger, so we'll see where we're at now. Now, as far as support, well, the support's going to obviously move higher because we potentially come and push this market higher. Support in this case is going to be right there. It's going to be the close here, open here, which is going to be 2367. And let's go move into the Aussie. Holy smokes, this thing's still going higher. Aussie closed above the recent highs found the recent move in equities. Resistance remains the same for Tuesday, which is 6507. And you can see that's what we had from yesterday. Although it continues to squeeze a little bit higher, we haven't got up to 6507, which is going to be resistance, but it continues to push higher. And I guess they're squeezing shorts. The only thing, like I said, that I'm looking at is that they're just going with what's on equities. And unfortunately, for those that are short the Aussie, equities are, the SPOOs are 2378 and the high is 2382 and a quarter. So it's really, and here's the deal. Once again, I want to sound like a broken record, but you see here's Amazon, Google, Microsoft. I mean Apple here, Microsoft, Google up here. You can see Tesla at close at a new high on this move. But my concern is these, the Amazon and Apple, they're really, I would think especially Amazon, are really placing the pressure on NASDAQ. So once again, equities continue to push higher. Now, the weird thing is, like I said, not a weird thing, but I think that a lot of shorts got run over yet last week. So I'm not sure. That's what I'm saying. I think they can push a little bit higher, but I think we can probably end up a little bit lower as the week goes on. But in the meantime, tell that to someone who's short the Aussie is really experiencing some pain right now. So anyway, resistance is going to be 6507. Support will be 6397. So only difference is we're moving the support to 6397, and that's just going with a level here. You'll see that right there, 6397. Let's go and move into the Kiwi. We did make it up. You can see here, this was our resistance from yesterday, 60.77, and we made it right there, and the market paired back a bit. So the Kiwi went to the right to the bias chart, resistance is 60.77, before pairing back slightly. Resistance for Tuesday will remain the same, the 60.77, with support at 59.75. So we got as low as 59.89. So it's going to still remain the same. Remains. Wow. So S&P's GSI commodity index is rolling all their contracts out of June. Their concern is that the June contract may go negative. Holy smokes. And with that, it's sent crude to new lows, although it's just slightly lower. So S&P's GSI Commodity Index has rolled all the contracts out of the June contract due to exposure or to get out of that exposure and fears that the June contract may go negative. So let's, you think that have a greater impact on equities? We're still holding up pretty well. Let's now go into the dollar CAD. And at this time of the day, I mean, I haven't been really trading equities other than I said, if it wasn't for that, expected news, with the NASDAQ or those stocks. Because right now, what we've seen here is the driver's been during the U.S. session. Sometimes we do see some pretty good moves in the European session, but the driver, ever since last week, the entire week of last week, has been during the U.S. session. So it's made no real sense for me to take on positions. But anyway, let's go and move on to the dollar CAD. So dollar CAD closed lower in a very, very tight range. Resistance will be 41.44 with support at 39.23. So I'm just looking here. I know it's susceptible. You can see how tight it is to a dip, and that hence why we have this wider range. So even if we break lower, I'm not looking for any support right in here. I think if it trips lower, we can just slide right on down here. So hence 39.23, kind of widen this out a bit. $41.44. With that, we'll move into the peso. So the dollar peso, like many of the other dollar pairs, appears to be marking time. The pair is above the key level of 24.62, placing bulls in control. Support is going to be 24.62 followed by 24.12. Resistance will be 25.05. So you can see the pink line. That's at 24.62, and that's been a key number for us over the last 2 or 3 weeks. Think about 3 weeks, I guess. You can actually see even longer than that. So we're resting right here basically on 24.62. That's going to be support, and potentially if we dip below that, we're going to 24.12. So it's going to be remaining the same here. On the upside is going to be 25.05. That'll just adjust a little bit lower. And let's go and put that 12 in there just in case so people know. There is some additional support at 32, but really it's where they could break, and it would be 12 if we hit a banana peel. Well, let's go into the dollar yen. So the dollar yen dripped lower, closing at new lows over the last 7 days. Support remains 693 with resistance at 778. So no changes. That was our support for yesterday, and the low was 696 yesterday, so we had 693. It's still holding. Once again, that's the same. These majors have been just absolutely dead in the water. With that, we're going to move into the dollar index. The dollar index, although on the bid, remains stuck in a narrow range. Support remains 99.63 with resistance at par 48. So once again, tight range. Wow, look, euro's popping up. Remember, we do have resistance at 870. Then beyond that would be 932, but 870. Um, so Kiwi Yen, I kind of tested the downside just slightly, punching up here. We had 64.96 as resistance. They did get up to 65.17. And the support down here was 64.04. They got up today as low as 64.25. I still like the 64.04. On the upside, we're going to stay the same, 64.96, so no changes here. Once again, trading very, very tight. And with that, we'll move into the euro yen. And I was just posting that in the chat room regarding the S&P with the WTI. Now looking at the euro yen. We're kind of trying to hold here, but once again, I can see how this must be frustrating because you're just not getting any breakaway here. Uh, the ranges have really tightened up quite a bit here. I mean, look at these wild moves here. And now look, I mean, today's range is 40 handles. And look at some of these moves. Just pulled this one move. You're talking a couple hundred pips. Anyway, looking from yesterday, gave it some room here. And I like that area right there. I had 1688. The only thing we'll tighten it up is going to be 1680. We had 1598. It has gotten as low as, we'll just go with the low for today. Keep it simple, 1584. And I think obviously if we were to go back down there, I think it's going to work as a trigger. Punch it lower. Equity's back on the bid. We're almost at 2880. S&Ps. Let's go and move into the euro odd. Euro might be starting to put up a little bit of a fight. Let's see. Nope. Holy smokes. Continues to drip lower here. We had yesterday 67.78, and it's still dripping lower, but really this is more about the strength that we're seeing here in the Aussie continuing to push. Let's see. We're even past the 78%. Holy smokes. Bank of Japan bought $120 billion worth of ETFs. That's one way to help try and prop up the market. Support's just going to be right here in this bar here, right there. You can see we closed above. So that's going to be support, which is going to be, I think they've already hit that. That is a low for the day. 67.03, so that's going to be support. And resistance, let's take a look here. I guess we're trying to put in a little bit of bottom off that 67.03. Resistance can be right there. 67.80. Right there, 67.03, 67.80. We'll start with baby steps, see if they can go a little bit higher. Obviously, you'd be looking up here at 68.10, but once again, that's where it would take for us to trigger a bit of a move here, right there. That's be with the first area where I'll try and run into some trouble. Obviously, it's 68.14 for a bigger push, but for right now, we'll go 67.80. And with that, let's go move into the Euro Kiwi. Well, it's trying to put up a little bit of a fight, but right here you can see there's a support here. And actually, you can just look at the low for yesterday, keeping it simple, 78.60, 78.60. I mean, this is a good level right in here. But once again, if they want to press the stops a little bit, where is it we're going to step in and try and stand in front? It's going to be right there. It's called 78.60. And as far as resistance, right there. You can see the bottom of this bar here. That's going to be resistance. Actually, confluences with this top in here. You see there, that closing bar. It's going to be 79. Just call it 79.78. Once again, just going to go with the small. Well, actually, that's what we have right there. So perfect. With small steps here. And let's go move into the Aussie Yen. Well, obviously with the Aussie continuing to push higher, like I said, these indices, we'll just jump in there. Actually, I'll just drag it over here. Look at the NASDAQ. So, of course, this is on a weekly, and this is the Aussie Yen on a daily. But you can see this continue to push higher here. And I just told you that I think it was Bank of Japan just bought 28 billion in ETFs. So I think the push continues to move a little higher. I think if you're short these Aussie pairs, I think you're basically stuck for the next 48 hours until we can get past some of these earnings reports coming out of the U.S. There's daily. I think you're just held hostage until then, not trying to be facetious in any way whatsoever. I just think you are until you can get past. Hence, why I have not been aggressive. Even yesterday, I didn't trade, not necessarily to be aggressive. What I'm saying is I would have come in with a little bit more activity, but I was myself trying to be cautious because once again, when I looked, I thought that maybe those numbers would come out, let's say today, but they're not coming out for another couple of days or another couple of days. So it's frustrating. It's just like, well, let them do what they want to do for now. No need to step in front. And then once we get on that day or the day after, hopefully we'll see these markets rotate lower. I mean, right now, the reason I say hope is I'm not short, but I have seen several reports complain about the volume. The volume has really dried up. That might be a good indication also. They've talked about the volume and the SPOOs has really dried up. Well, I can see why. I mean, we're punching hard. I think people aren't willing to buy up in here, but the marks are still holding. What's artificially holding? I got to think once again, it's those reporting bits of data that are expected to be due out the next couple of days, and until then, you're stuck like Chuck. Resistance you can see is right there, although I think they're right at it. This closing bar here, well, not closing, but you saw the dip and then the open, which could be 69.41. We actually had 43, so box next, we'll keep it there. And then we had 68.27. Go with these touches right here, and actually using these highs, and that's actually the low. Look at that. Actually, just a hair bit below the low. 68.96. Doggone it. Let's go into the guppy. It's even working higher here. Right there is going to be a resistance. You see that closing bar there? That confluence is almost with this low here. So that is going to be a resistance, which is weight 33.76. Support. Right there. You see this close and these two This is almost like a little spinning top, but really just a dearth of activity. That support is going to be right there, 32.80. And let's go into the starting odd. Clears a bell here. 91.62. And we may just see that too. These indices are holding up. Upside, right there. You see there, that opening here, this confluencing almost with this. So I'm going to go with that opening bar, which is right there, 93.45. We did have 93.23. We'll go 93.45. We may not see that for a couple of days. And there we go. There's the bias chart. You're trying to push back up higher. We'll go on back into the indices. And you can see we're still, up in here, up in the stars. Key areas here too. Look, you see that? This is 2088, so we're not too far away from that. And we do have 61% here. And hang on a moment. Bear with me. Shui was asking me about and I was typing in the answer so I could respond to him real quickly. I didn't want to go in and not respond, but at the same token, I didn't want to just jump off. So we could just kind of talk a little bit about the equities. And he was asking, he said, with the story that I posted about them rolling out of the WTI, he said, is that bullish? I said, and we'll go to that. Let's just go, because we'll spend some time here. Hang on. There's no rush. That's 4. So I posted that story, Dow Jones, S&P Dow Jones to pre-roll. They have the Goldman Sachs, they have the GSCI, which is called, if that was the one they're referring to, which is Goldman Sachs Commodity Index, and they're rolling out of the June, rolling all their exposure from the commodity index. That keeps the pressure here on the June. He said, he thought, well, is that going to be bullish? And I was saying, normally, generally, that's going to be bearish for equities because of the overall exposure to energy products. And not that just rolling out of that puts that much pressure, but it just keeps, once again, like I said, it just reinforces which we're already in a really tough environment globally when you look at crude oil. But But right now, the focus, and you would think, okay, well, then that would be bearish, but then why are the equities not moving lower? If you, meaning me, you're saying that that would be generally that'd be bearish. Well, the reason we're seeing that is once again, I go back to what I was referring to is we're on the bid because these stocks that are going to be reporting in the next couple of days, Amazon, Microsoft, those two in particular. I mean, you could make questions about Apple. There's going to be a delay, blah blah blah. What impact Google? Although that would certainly they may benefit, but certainly a company like Amazon, which has gone to the frickin' moon, is benefiting from the virus because once again, of all the deliveries, people staying at home, and then of course Microsoft, a lot of services that go that certainly have more of an impact because of the work from home, and in Google once again probably a lot of traffic. So these companies that are going to be reporting the next couple of days, you would think are going to positively benefit. And so we're staying on the bid. So when I look here, as I mentioned here, when I did that interview with Anthony Grudelli, the reason I mentioned that again is because he said, "What's your outlook?" And I said, "Well, I mean, we did have I'm looking at the weekly. I said, I'm seeing a hammer on the hammer. I mean, hanging man here on the Nasdaq." But at that, I told him, I go, I think we can push a little bit higher to start the week, but I think that eventually we'll rotate lower. So I think they're going to stay on the bid until we get past these announcements. Once we get past these announcements, we can work a little bit lower. But hence, that's why you're seeing these moves continue to drive higher in the Aussie. And people are stuck in those short positions thinking this is crazy, it's still going higher. But I think it has a lot to do with this. And certainly that's impacting what you're seeing here in the S&Ps. Look at the S&Ps, not as pronounced a hanging man as the NASDAQ, but you're seeing a couple of back-to-back hanging man here. And we're still staying strong here. Here's the daily, and this didn't surprise me that we came back here, but I am surprised to move up in here. I thought, okay, and then now, and one mentioned a level I mentioned in that interview, I mentioned throwing it off hand was 28.54. Well, we closed above 28.54. You see what I'm saying? So potentially this market can still move a little bit higher, and that would take us to right there, that closing bar there, which would be 29.37. So are we going to make that move to 29.20? I don't necessarily see it right now, but if we get a good solid numbers coming out of the things with the NASDAQ, maybe we could punch up in there. And my thoughts were, because usually I try and look at who's stuck on the wrong side. Now, I think anybody that's been short from down in here or here or here, I would think they would have gotten stopped out. And if they haven't, they probably got stopped out yesterday, or maybe a little bit here. I'm just wondering, like, how much further can it go? But, I mean, we shall see. But, I mean, even with these economies opening up, at the end of the day, you're not going to see employment come immediately right back. And so it just seems odd that it'll be a hold up here. Fortunately, like I said, I don't have a position. I've been, since last week, I've noticed that a lot of activity has been taking place during the U.S. session. So until that changes, I'm kind of holding back doing anything outside of the U.S. session, even to the extent that I didn't even trade it, although we did dip lower in the Asian session. Just kind of leaving it alone until we get past these economic reports that certainly, like I said, a company like Amazon is going to benefit greatly, and the stock reflects that. So we can still see this thing stay bid. Here's the Russell, up in here, although we have kind of rotated a little bit lower from that 1284 that I mentioned at the beginning of the show. But once again, like I said, they're still way up in here, and you've got something that's valid, i.e. the reporting for Amazon that's going to certainly give this a push. Microsoft, that should benefit. Google, to a certain extent, that should benefit. These are going to be reporting, so hence why these, I believe these indices are staying on the bid. Once we get past that, then I think we can really start to slide back. That's what I'm kind of looking forward to, because I think the upside is rather limited, although we can still push higher. The downside, right or wrong, I believe, wow, if we start to rotate lower, we can really start to see this thing come back off. But that's what we are on these two things. But anyway, that's all we have for today. We're up at the top of the hour. Thanks for joining us here on the European Crossover webinar. I'll see you in the chat room.